Friends, FMA members, and fellow academics around the world. We are delighted to be able to be gathered together at this time of the day for this special occasion of the conference. Let me start by thanking you for attending the 2021 FMA Virtual European Conference. We are sorry we are not able to welcome you in our lovely city of Limassol this summer and enjoy the conference in person. We made every effort to make this possible, but unfortunately the pandemic caught us for the second year. Despite this, we appreciate your participation in this virtual meeting and thank you all of you for contributing to the program. We were able, together with Michelle and the two other co-chairs, to put together a very strong program with academic sessions of papers spanning all fields of finance, elevator pitch sessions, a doctoral consortium, as well as overview and research ideas session. And of course, our keynote address by our dynamic Nadia Massoud. We hope you are enjoying the conference so far. And of course, we look forward to reuniting in person and hopefully at some point hosting the conference in Limassol and with a physical presence. Well, before we move on to introducing Nadia and our keynote address, I'm pleased to announce the Best Paper Award winners for this year's European Conference. The first award is the Corporate Finance and Financial Institutions Prize, sponsored by the Cyprus University of Technology. And the prize goes to the real effects of environmental activist investing, by Lashmi Narayan, Hong Kong University of Science and Technology, Kunal Santeva by Rice University, and Varun Sharma by London Business School. Congratulations to the authors. It was a very interesting, exceptional paper. And the second award is the Best Asset Pricing and Investment Paper, which goes to the paper co-authored by Jean Ambrosio of Bank of Finland and Iftekhar Hassan, Fordham University and Bank of Finland, titled Quid Pro Quo, Political Ties and Sovereign Borrowing. Congratulations to all the winners, and they were both very high caliber papers and exceptional contributions to the program. Well, demonstrating that despite the pandemic, our research kept us going. I'll pass you on to my fellow co-chair, Sotiris, to introduce Nadia and the keynote address. Thank you very much.
Hi guys, it's a pleasure to have you all with us this year, although we are on a virtual conference. Despite that, we have made a great conference, and this is basically due to your participation. I've got the pleasure today of having with us Professor Nadia Massoud, who is not only an academic whose reputation precedes her, but she's a wonderful person, a wonderful friend, and a great supporter of the FMA. Professor Massoud will talk today about the impact of disruptive technology on the financial markets, machine learning, and artificial intelligence. We will invite you to ask questions during the speech, and Nadia will obviously answer these at the end of her session. After the keynote speech, we'll all gather in a networking session on Gather, and the link is provided on the online program and in the chat. I might not be able to join, as in 4 or 5 hours I have to be in Japan virtually, and down here it's almost midnight. Let me tell you a couple of words about Professor Nadia Massoud. She holds the Ian Potter Chair, Professor of Finance, and she's an Associate Dean of Research at the University of Melbourne and the Melbourne Business School. Nadia is an internationally known professor of finance, not only for her research, but teaching as well as her expertise on financial intermediation, blockchain, and digital technology. Nadia has extensive experience in research and teaching, as I said, but she's also a very experienced consultant in financial intermediaries. She has also served as a consultant for the Central Bank of Canada, where she actually designed a state-of-the-art system where she was aiming to optimize the production and circulation of the currency in the economy, and this state-of-the-art is still active today. She has also been invited to act as an expert witness for the federal government of Canada when they were investigating the competitiveness of bank service fees. Nadia's research has been published in renowned finance journals, and she has actually taken extensive research awards. Her research appears in the Review of Financial Studies, Journal of Finance, Journal of Financial Economics, the JFQA, the RAND Journal of Economics, and many, many others. I don't want to keep you long. Her reputation, as I said at the beginning, precedes her, so we cannot wait but just to listen to what Nadia has to say today about the disruptive technology on financial markets. So, Nadia, the pitch is all yours now.
Well, thank you, Saturis. Thank you, Elena, Michelle, and Karen for your trust in me and for the invitation. Unfortunately, we have to do it in Zoom. I was so excited to go to Cyprus, especially now it's winter in Melbourne, and we have to live with this pandemic, unfortunately, for a little bit longer. It has been hurting us, but we have to show resilience and continue living and producing what we used to do. So let me share with you my slides. Okay, do you see my slides? Okay, just let me do the laser point. All right, so what am I talking about today? So we have lots of disruptive technology in our economy emerging, and we are bombarded actually by it. A big part of it coming from computer science, which is related to artificial intelligence, which is what we're trying to achieve or to study, how to make computers to think and do things in a way similar to what we do it as a human. And there is lots of development in this stand of technology and development of studies. The focus today will be on two issues related to artificial intelligence, which is machine learning and natural language processing. So at the same time, if we look at the financial market and investor, what we notice, we are also bombarded with lots of information and relevant news to decision makings and to investment and to stock market prices. So you look here, you see two big investors that we are very aware of them, and their big bread and butter at the beginning of their day is to check what's going on in the news, to basically go on with their life and decide what to do in terms of financial decision and investment. So those investors, when they look at this amount of news, what they try to back out is try to back out the sentiment, try to back out information from this news. And here I listed 3 headline news for you, some of it from Australia, some of it from the US. And when investor will look, even without reading the article, looking at this headline news, try to back out some information because they get too many of those headlines and they want to quickly back out some information to give them some guidance and then dig deeper maybe in other specific issue related to their interest. So a normal person will look at those news like WiseTech shares plummeted again after a short seller launched another attack. So we'll create kind of negative sentiment about WiseTech. WiseTech is a technology firm in Australia, very known for being innovative, and it has been attacked by short seller on and on again and again. And the same thing for the second headline and the third headline, one positive, one negative. And right away, you sense you have some feeling how, and you want to figure out how this affects share prices and what does it mean for me as an investor if I'm holding those shares. So let's see what investor could do with this information. They can do sentiment analysis and incorporate this in their investment strategies. And we know also, like high frequency trader, they use a specific algorithm to back out this information quickly and incorporate it in their algorithm in their trading. So sentiment analysis has emerged as a subfield of natural language processing. And the process of doing this sentiment analysis requires 2 steps. I read many papers, and not those papers, they do not basically walk us clearly about those steps. And my task today is talk about those steps briefly, and I show you one of the approaches I developed myself with my PhD student, Nazanin Babel-Murad. So step 1 for the sentiment analysis is to confirm text to format readable by the machine. When we say convert text, like you have large data that you want to back out some sense of it. Is it positive, negative, neutral? It is uncertain. You can go through like the basically different way of analyzing the text. I'm focusing today only on 3, which is negative, positive, and neutral, but we can add more to it, which is uncertain as well. We can add to it. So this is a very important step, and many researchers, especially in finance, ignore this step, and they just take the simplest possible way and they try to be innovative in step 2. Okay, so this is what I'm going to highlight. Step 1 is not taken care of in finance literature very carefully. In step 2, after I convert the text to format readable by the machine, I have to develop specific approach and use specific tools to generate the final sentiment. And this could vary from simple format like a dictionary, or it can be supervised, unsupervised machine learning. And there is also a new approach which is called transformed learning that I will highlight quickly through my presentation. What I want to highlight, regardless of the tool we use, we could use the most advanced tool to analyze our sentiment analysis. But if I didn't pay attention to how I convert text to the format readable by the machine, I will face lots of challenges in terms of the accuracy of the output of my final sentiment assigned to a specific text. So let me walk you through step 1, which is format of text presented to machines. So first I have large data. I want to convert it to be readable by the machine. The famous one is the bag of words, and this is used extensively in the finance literature. And I'm going to walk you what I mean bag of words. And there is another one, semantic and syntactic format. And there is topic modeling. So there are 3 formats, how I convert the text to a format readable by the machine. So if we look at the literature, there are many papers in the finance literature, and you look here, the bag of word, most of the paper fall in the bag of word format of converting the text to machine readable format. Semantic, syntactic, there are a few of them, and some of them actually not finance, some of them computer scientists. Topic modeling, mostly here, finance, computer scientist related research. Most of the finance falls here. This is not a comprehensive list, it's just to show you an example. There are maybe some papers, sorry if your paper belongs to one of those categories and I don't list it here. Now, what I mean by the bag of word. So when bag of word means when I look at the text, I look only at the word. The word will be tokenized and considered as just exist as a standalone without taking in consideration how it fits in the semantic and syntactic of the text in the sentence. What's the preceding word? What is this? What is the next word? And what is basically the text is all about? So in other words, the topic, what is the topic? The word could vary based on the topic. The basic word we can use, liabilities. Liabilities in a normal life can be given negative tone. You are a liability, for example. But if we're talking about finance, liability means nothing. It's just like it's a side, it's an information about the balance sheet. It can be it's the liability side of the balance sheet. It's neutral, doesn't give us any tone. And this is the problem. Like when you just look at the bag of word and tokenize the word and ignore the syntax of the sentences and the text, you're gonna miss a lot. So the bag of word, many researchers use the bag of word as I showed you, and they use it with either just a lexicon or Polarity dictionary. It can be general Polarity dictionary, and I will show you what I mean, or it can be domain-specific dictionary. And one of the famous finance paper by Loughren and MacDonald that they use the domain-specific dictionary. It's also, what's interesting, used in machine learning. So they combine the bag of word with very advanced techniques like machine learning, and we have some recent studies here, but mostly supervised machine learning. So what is the concern with this format? It could miss, and I will show you an example how it will misclassify the tone of the sentences or the text we are assigning tone to. Additionally, if in the sentence or in the text, if I'm analyzing, for example, financial news, I will not be able to attach multiple different tone to different firms mentioned in the same text. Some firm will be mentioned in a negative way and another firm mentioned in a positive way. It's very hard to disentangle the sentiment at the firm level if I'm using the bag of word approach. So this is a very big challenge, and many researchers trivialize those shortcomings, and they just go on with the just bag of word. And I said, like Loughren and MacDonald, when they looked at using the dictionary, for them, for example, this issue is not a problem because they're looking at, for example, 10K or 10Q for a specific firm. Maybe that would not be a big issue. It will be a big issue if you're looking at headline news and you have multiple firms mentioned in the same news article. Now, so how the semantic and syntactic format different than the bag of word format? So the semantic and syntactic, instead of tokenizing and take the word as a standalone, I'm going to take in consideration the sentence. I want to understand the position of the word in the sentence. It is the grammar, and I want to understand what is the text is also as a whole, not just words by words. Okay, so this is developed in computer science. Computer scientists actually use this more intensively than us as a finance. Few papers in finance, but also with some interaction or overlap with computer science, deploy this semantic and syntactic format. The one here I mentioned, the paper I mentioned here, is still the usage of semantic and syntactic feature of the text is still limited, and I will highlight how they are limited. Example of semantic and syntactic format, those two headline news. So, for example, here, when I assign tone for this headline, 7 different insiders have sold shares during the last 30 days. Now, I could usually tokenize impactful words like sold and insider. And if I don't understand that the insider and sold and shares came in the same sentence, I will not be able to assign the right tone for this headline. So now, because I took in consideration the sequence of words and their order, I was able to assign a negative tone for this sentence. And the same thing for the positive sentence as well. Okay, so and I hope this is clear enough for you guys. Now, in addition to this, the third approach for presenting the data to a readable format to the machine is to take in consideration the topic. So what is this, for example, news is all about? Is it about financial news? Maybe the first thing we want to identify financial news. Is it talking about what? Is it talking about business? It is talking about, for example, financial market? Is it talking about competition? Is it talking about merger and acquisition? So I want to understand what is this news is about. So what we call a topic. So the topic, I create an approach, and this is actually computer science. They try to identify what is the text is all about, which topic it's focused on in that text. And there are many approaches for backing out the topic adaptive sentiment. I am analyzing the sentiment based on the topic. I'm going to come back to this example again. So for insider has sold this is for Dr. Pepper Snapple, the same article. If you look at this article, they talk about selling shares in the financial, so selling shares, insider selling shares in the financial market. So it's telling about, it is related to an area of stock market. While if you look here for the second headline news, it's talking about Boeing may sell some helicopter, one of their main products. So it is related, for example, in business area. This is a topic adaptive analysis. How is it topic adaptive? So I identified the first article, the first headline related to stock market area, the second headline related to the business area. And what I'm analyzing here the word sell. The word sell is the same word, but when I look at it in those two headlines, in the first one, it is negative. In the second one, the same word sell it's mostly positive. Right? Negative, positive, the same word. So in other words, what I'm saying is similar to liability. So liability is not the only word. There are many words that could give different connotation based on the domain. What I'm talking about, the topic adaptive approach. To the topic adaptive approach, I'm gonna assign a tone to a specific sentences and words based on the topic. And this is what we call topic adaptive approach for sentiment analysis, okay? Sentiment analysis approaches. So now the first step to talk about how we prepare the data to the machine. And now we're gonna talk briefly about sentiment analysis tool or approaches. So there is two main approaches, which is the lexicon. In other words, I look at only the words, tokenize the words, or I can use more advanced approaches like machine learning. For the lexicon, we have the dictionary based. In other words, I'm gonna have just a set of words that I'm gonna look at when I analyze any text. So I have a dictionary and I apply my dictionary to those texts I'm analyzing and assigning sentiment to it, okay? This is, as I said, this is very common and combined with other machine learning. The other one, which is similar to the dictionary, but it's more adaptive to the text. In other words, instead of having a preset set of words, I will look all the words and the impactful words and the repeated words in the text as a whole, which is little bit more accurate than just having a preset of words. If those words not mentioned in the text, I'm not gonna evaluate or analyze those extra words that those writers chose to be impactful in their writing. And then I have machine learning. We have the supervised and the unsupervised learning. And this is a way after I prepare the data to the machine to read, and then I do my statistical analysis to create a specific sentiment to the text. And it could vary, is like linear classifier. It's like a classifier approaches, a statistical one, sometimes assigning a probability for this text to be positive, negative, or neutral. And then the unsupervised one is more advanced. And it allows the researchers to train the algorithm in a specific way, sometimes expose the algorithm to a very large library, and then bring it back to you and to fine-tune it based on the domain that you are interested in. Okay, so this is what emerged recently. And the algorithm itself could improve itself in the future. And this is where things basically get improved a lot. This is recent development in computer science. Finance literature, unfortunately, is lagging behind and not using this technique in their research and sentiment analysis. So we are here in the supervised learning, and we are in this region. This region, more, it is computer science, is not finance literature. And this is where I advise new researchers, especially PhD students, junior professor. This is where, if you want to have an impactful research, this is maybe, and you are in the area, this is where you need to think and work on. Okay. For example, this one, the BERT, it is available, it's developed in Google 2018, and it's available, the code itself available online. You can have a look at it and understand how it works, and you can adapt it to your specific sentiment analysis and the domain you are interested in. Now, let's look at the general polarity dictionary and look what kind of research developed in this area. We can see here the General Inquirer, Tetlock, one of the first researcher who actually worked in sentiment analysis, and others. And notice here they are only dictionary, and dictionary developed by psychologists or sociology and finance. We borrowed the approach and we applied for financial literature. So those are the earlier studies. And what are the problem with that? The problem of that, the problem with just using general dictionary not designed for finance has lots of issue. Researcher found 73.8% of the negative words in the GI are not considered negative when it's used in the context of finance. In other words, there are development in sociology and psychology. Using it as it is not suitable for finance literature. And earlier research at the beginning used that, and now they realize this is not the way to go anymore. Now, in a state of using just general dictionary developed by the psychology or sociology, people in finance, researcher in finance, recognize that we need to be more specific, and they start to use domain-specific polarity dictionary. And as I said, one of the famous dictionary developed by Lochran and MacDonald is really good dictionary, but researchers need to be aware how to use it. It was developed for reading specific filing with the SEC. Okay, for a firm, and it is useful for that tool, because you are basically looking at a very huge files, and you need to be specific and look at keywords to analyze those texts. I noticed, like many researchers, come to Lochran and MacDonald dictionary and apply it in different setups. For example, analyzing financial news. That will not give you proper analysis. So you need to be careful. You cannot use it for analyzing media, for example. Financial reporting, useful. You could do even better, but it's one of really good approaches for financial reporting with the regulatory body. So as I said, there are many papers that use the domain-specific dictionary, but still researchers complained about this approach, and they say do not provide sufficient accuracy, and you can check this from those publications as well. Still, it's an improvement from the general Polarity. The domain-specific, which is basically tailored the dictionary to finance, it still have major issues. And I'm going to show you, just demonstrate how it works. So here are the two headlines that we looked at, and we tried to assign sentiment to them. Let's see how the Lochran and MacDonald and the GI dictionary, this is general dictionary, this is domain-specific dictionary, how they will assign sentiment for this headline news. GI, so I took those with my PhD student, we took those headline news and we ran GI on it. And the sentiment we got, the keyword is sell from this headline news. They basically pick up the words that be basically picked by the GI was the sell. Everything else was irrelevant, and it is assigned as a neutral. Lochran and MacDonald, sell is basically the keyword again in this sentence based on this dictionary, and assigned a sentiment as a neutral. Okay, which is now those two headlines, they are relevant, could affect our financial decision, and if we're using the wrong readable format and approach, we will not get the right sentiment. Okay, so we're not doing a good job. The other approach is to use the supervised machine learning in the literature, which here lots of literature. Again, it is mostly supervised machine learning in finance. And most of it is basically how to analyze the data and spit out the sentiment. As again, is the Bayesian rule. Neural network proven to be previously was very hard to do, but with emerging technology and development of computer, neural network become now a much better approach. But still, because it's supervised, again, it's not unsupervised, it's the supervised, and this is many papers here. I'm missing some papers, but it's just for illustration. Again, it's not for counting all the papers in all of these methods. What are the issues that researchers reported on the machine learning? Even though they moved from the dictionary base, they moved, for example, for another advanced approach to train the algorithm. I need basically a corpus of data to train it, and then apply it for out of sample analysis. What they found issues with the machine learning literature in finance, they use a very small training data to train their algorithm to be able to tell the sentiment of a text. And the tagging of financial concept, it can be directional dependence. They are considering direction dependence, but they didn't consider them within financial data. So there's still the domain is not taken in consideration. And if they wanted to make it relevant to financial market, they use a small size or a small sample of this financial concept word list. So they still moved a bit away from the dictionary, but they don't move fully. Still like a limited set of financial concept they use. If the writer use different emerging concept, they will miss it. Okay. Now, again, I demonstrate to you how the domain-specific dictionary and the general dictionary assign sentiment by examples, but with machine learning, I cannot use examples because, again, it's a probability. So I went on and collected data and compared the prediction of the algorithm with manually tagged financial news. So I used only headline news. So this is an experiment we did. And we combined I combined two approach with my PhD student, again, Nazanin. We used the text plot. This is algorithm for NTLK available again online, but I used the bag of word approach. And I used advanced machine learning, which is naive Bayesian approach for analyzing the algorithm for assigning the sentiment. And in this graph, what I did, I used the predicted sentiment using naive Bayesian. And on this side is the sentiment, the real sentiment based on human tagging of the financial news. And what we would like to see to have, basically, we want to see the accuracy. This is an approach used in data science, which is basically, if you have false positive or false negative, right? So there is an approach where we have precision and recall based on those two approaches. Or this approach, not two approaches, based on precision and recall, and the F1 score, which is the weighting of the precision and recall, which is false positive and false negative. And what we would like to see, this is what we call it the fuzzy image. What we would like to see, the blue on the diagonal. If the dark blue on the diagonal means my prediction is coincide with the accurate prediction of sentiment. And what you will see here, in other words, you want it to be higher than 50%. And what we see here for the precision and the recall is really very low and not doing very well. And it is also portrayed in the image of it. So in other words, the naive Bayesian and the bag of word, combine them together for sentiment analysis of headline news, doesn't work very well. It's basically 50-50. So I'm not doing very well by applying those tools. Okay, so let's see how good are the academic in finance are doing compared to leading industry and research. All of us heard of Tesla and Elon Musk and what he's doing. So what Elon Musk is doing, he is trying to build, he's using machine learning to build algorithm for self-driving car. Let's see how he's doing. This is people's lives. Like you cannot train the algorithm for driving algorithm without proper data. So what he has 600,000 cars driving with real driver on the road and recording the data. And basically you want to collect data to train the algorithm. Here, Elon Musk is training the algorithm for self-driving. We are training the algorithm for sentiment analysis. So in terms of approach is very similar. And look how many miles, how many data points he has. He has 1 billion data points for the autopilot to be trained. Okay, and this is where they're making inroads and difference. If you want to achieve high accuracy, we need large trained data set, and this is what's lacking in finance. And the competition between, for example, Tesla and Waymo is basically on the data points. Waymo only have 15 million miles in comparison to 1 billion. So for sure, the algorithm developed by Elon Musk will be much more accurate than Waymo. And this is where the competition in the market and in this industry. Now, I gave you a general introduction of what's happening in the literature and where we sit now, and maybe highlight also information for a new researcher, where to focus and where to take sentiment analysis to. I'm going to show you also my own research in this area. And we developed, in this paper, we developed a new topic adaptive synthetic approach for sentiment analysis. It's co-authored with my brilliant PhD student, Nazanin Murad, who will be on the market in a year or so. If you're looking for someone in this area, she's the one to hire. So what we do in this paper, we propose a novel approach which combine both. We combine topic adaptive tone and the topic adaptive tone for finance field, and looking in specific, and our focus is in news, but we are taking in consideration grammar and the syntax and the semantic of the news. So in other words, we're trying to make it as comprehensive as possible. For the first round that I present here, we're not applying machine learning, but in the future we'll be doing also machine learning. How am I doing with time, Elena? I'm good? Just to base myself.
Let me check the time. Why is it doing that?
You're okay.
I'm okay. I still have 20 minutes or more.
Yeah,
Okay, very good. So this is our approach. In other words, again, our approach will use the topic adaptive approach for the tone, and in finance, specialized in finance, and we will take in consideration not bag of word. We're going to take the semantic and the syntax pattern in the text. We focus on headline news for now, not the whole text. We focus on the headline news. There are new papers emerging in the market saying when you analyze the full text, actually you lose the sentiment, because some paragraph could be contradictory with the other paragraph. And instead of helping to improve the sentiment, it will reduce, especially for media news. It will not help in basically creating more accuracy for the sentiment analysis. And in addition to the approach, the biggest impact is development of the approach. The second thing is to show you how our sentiment analysis related to financial market activities, like stock return and volume. It could be also volatility as well. Additionally, we conducted validation tests to show you how our approach performed in comparison to other approaches. For now, I'm going to show you also the Lachlan and McDonald bag of word. We're going to compare it also to machine learning approaches. And this is still and we have the paper, but we're still revising and improving the approach. If you are interested in our output so far, it is available online. We have and it's available from this link. We will send it to you also after the webinar to have a look at it. We share the data with you as well. Now let's look at the data. So as I mentioned before, we have a problem with the training data. The training data in the literature are really small. They don't have enough large data set to train the algorithm. And as I showed you from Elon Musk, training algorithm is really important. So what we did, we collected data from 15 leading newspapers for a sample of for S&P 500 that mentioned in the news during that period, 2014 to 2018. And the number of news collected, 236,000 or 237 approximately thousands. We separated the sample into 3 subgroups. So the first 111,000 news headlines are used to train the algorithm. This is what we call in sample, to create an algorithm to predict the sentiment. This one is for the verification, the true positive and false positive, true negative, false negative. This is for verification. This will be tagged by us as researcher, and we have a group of researchers, and we have linguists on the team as well, and compare it with the output from the algorithm. And the rest, which is 124,000 or 125,000, this is for out of sample, and see how this will be related to other things association with the stock market activity. Again, we need to train the algorithm. This is the in sample. This is for conducting data science approach for false positive, false negative, which is the verification sample. And this is validation sample out of sample. Now, what is our conceptual model? Our conceptual model for sentiment analysis for media and headline news consists of 7 steps. Okay, let me walk you with this schematic of our approach. The input is the text, where I have the headline news. The output is the topic adapted tone for at the firm level. Notice our approach at the firm level, because multiple firms could be mentioned in the same headline or in the same article. So I want to attach the tone at the firm level rather than at the article level, okay? Which is really important. We don't have anything like this in the finance literature so far. So, and if you walk through those steps, so it started from parsing the phrases, the sentence or the headline to phrases, which we call headline splitter, using the splitter, commas, colon, and so on. So most researchers in finance, this step is basically just ignore. Any comma, just remove it. They consider it as a noise when they tokenize the words, especially in the back of word approach. And then I'm going to use tools, the NTLK, natural language processing tools, is to basically assign some information to those words. I don't want to do it myself. I want independent program to tell me if this is objective, this is noun, and so on. So, okay, it's like using dictionary, and that we use in our daily things. So this is the fourth one. But before I go to the fourth one, there is information about the company. So I want to understand the sector of the company, and if the company belongs to my list. Because now I'm looking at S&P 500, I want to identify whether this headline news is related to any of the firm in my list, the S&P 500. Additionally, when I have the text, I want to figure out what is this text all about. So what is talking about? Okay. For simplicity now, for demonstration, I used only 2 topics, and I will show you how we do that. And then I go through a process where I take in consideration the topic adaptive sentiment of the lexicon, similar to the cell, whether it is in a specific topic, it has different connotation in terms of both positive, negative, and neutral. And then this one is really important. What we look at is not the words, not tokenize sell, buy. We tokenize the verb, the adjective, and make it as a sequence of verb, nouns, adjective in the sentence, and assign sentiment to it within the topic. In other words, we're assigning sentiment on the grammar and structure of the sentence rather than the words as it appears in the dictionary. And that's the innovation of our approach as well. Instead of creating algorithm using words, we are using structure of the sentence. Okay. And then we use our core, which is, this is the head, the main driver of the all steps in this square, to assign a tone at the firm level. Okay. In other words, in the same headline, I could have different tone. For example, for Apple can be positive, for IBM can be negative. Okay. Which is very powerful. This is we could not achieve before. Now, I'm going to walk you. It's really thorough paper, and we go through this process. Can be very technical, but it's really useful in innovation in finance to understand how to analyze sentiment analysis and how to use those tools properly to make proper prediction and understand the movement. And especially for behavioral finance, we want to understand how this information affect market prices. If I don't do proper analysis, I'm making wrong prediction. And we show actually in the paper there are some wrong predictions, especially for positive news. Now, I'm going to walk you through those steps in a little bit more detail, just to give you insight how it works. Component 1 and 2, where we look, this is the first steps that we will have the headline splitter. For example, I handpicked a specific headline that mentions 2 firms. So this headline talk about ExxonMobil and Chevron. And oil and gas, let me read it quickly. Oil and gas stock roundup. ExxonMobil, Chevron beat earning. They are beating earning despite collapsing crude prices. So in other words, they are doing really well despite the downturn in the market. Okay, so and now the first step, despite, by the way, we consider it as a splitter because it's considered as like comma because change, it is a phrase after it. And this is not it's not our approach. This is a common approach in the computer science literature. So the first step is to break the headline news into phrases that we analyze their sentiment independently. And then we have the final sentiment at the firm level. So first sentence or phrase is oil and gas. Second one, if you look, colon, ExxonMobil, Chevron, and then despite collapsing crude oil. Okay, so in other words, we have 4 phrases in this headline news. Second thing I want to figure out who is mentioned in this headline news. We have here Chevron and we have ExxonMobil, and both of them in our S&P 500. Now we identified this news has 4 sentences and it has 2 firms mentioned in the news. And we can link also, we can be more specific and link them to their industry. Now, component 3 of our approach is talking about topic analysis. And this is really advanced approach where we do machine learning to back out the topic out of our in-sample of a news headline. So we followed a very detailed approach for topic analysis to extract, which is first to start with the cluster analysis, which is unsupervised machine learning. And we ran a specific algorithm to maximize the difference between the different clusters. This is what we call LDA. And based on our cluster analysis and a DLA, we have 50 topics. So we were able to find 50 topics. And we also identified cluster by firm, we have 221 clusters. We work through those topics and cluster within firms, and we try to identify the topics. And in other words, we will look topics that are very similar to each other. The machine will tell you those are topics similar, those not similar, based on a large database. And then we come as researcher, and this is common approach. We did not invent this. You need to come in and give those clusters that done independently from you, give it a label. Sometimes you combine similar cluster just for easy of handling it. In our approach here, we can make it more broad. Just for illustration, we combine those clusters into business and finance news. Business is related to the firm's specific activity, idiosyncratic to the firm. Marketing news is related to the financial market and for investor and trading. And this is where we summarize this. We have 1,744 features for business topics. For example, crude prices, CO. You will see in the same sentence, you could have business and finance at the same time. So there are keywords that will highlight to you that this is about business, this is about finance. This is where researcher can come in and play with that and tailor it to their needs. I want to focus on merger and acquisition. I want to focus on for example, leverage buyout and things like that. You can play with that more. Here, with just for illustration, we created 2 topic adaptive lexicon. Let me walk you through this same headline. I'm going to use this headline through all the steps through our approach. If we look for this, if we apply the topic adaptive step in our approach, we will look here, beat earning comes as finance. And if I go to crude prices, this is business. So I have finance and business in the same headline news. Okay, but if we look at beat earning, this is talking about stock market activities. Now, component 4, I want to use part of the speech tagger. And what I mean by a part of a speech tagger, basically, I want to use basically the dictionary. I use NTLK tools that are available for me. It's available. Google made our life simpler. You can use with reasonable knowledge of Python. You can implement and use those tools to conduct this analysis in your text. And learning this is not very hard these days. Lots of courses that you can take to enable you, if you're interested in this area, to do those steps in seamless way. So I identify the words that can have grammatical impact. Beat is a verb, earning is a noun, and this is not assigned by us, it's assigned by those tools, which uses dictionary, okay, existing dictionary. I'm going to just walk you through how we can assign a tone for a specific noun or verb. If you look at noun expression or noun words could have affect sense or semantic orientation. Affect sense, some words or some sentences, noun sentences, will give you immediate tone. For example, growth, development, they are positive. Bubble, collapse is negative. Product, contract, they are neutral. So this is, we have those noun expression, and based on the dictionary, we can assign those tone for them directly. And you have semantic orientation words. In other words, this word by itself, it means nothing, but need to combine with something else, something else to give me another word to give me a specific orientation. Like it is positive, and if it is positive up, stock prices increase, then it's positive. Stock price drop is negative, right? And positive down, like task and risk. Risk decreases is positive. That's why we call it positive down, okay? Same thing for the verb. There are verbs that completely positive, negative, and they are directional, is not with fixed sense. It is a directional. It needs a modifier. For example, up and down, climb, up, down, decline. Okay, so this all knowledge developed from linguistic and computer science, and we're using this knowledge that developed in our tokenization of the words as verb and noun, adjective as well, and we have also noun sentences and verb sentences or clauses. After that, it's the word cell I showed you. The word could give different connotation, positive and negative, based on the topic, like cell, like liability, and these things. Many other words as well. So now the next thing, I want to assign sentiment for the topic adaptive lexicon. In our example, beat is verb, earning is noun, and because it is finance, beat is positive, earning is noun, and positive up, based on the previous analysis. So this is how we take the sentence and break it down to verb positive, noun positive up, or noun negative, and the sequence of those grammatical structure will allow us to assign a tone afterwards. So for component 6, which is the tone syntax pattern lexicon, so we have 5,432 pairs of tone syntax pattern. So this is based on a phrase, not the whole headline. We want it on phrase, and then at the end we will have assign a tone at the firm level within that headline. So if you look here, there are many sentences basically just built on the tone using noun positive or noun up. Look here, for example, here, we have verb positive plus noun positive up is assigned positive. And this is what we have in one of the sentences there. Notice negation, which removed from most of the studies, is included and used to assign sentiment to it. In other words, what is the benefit of this approach? If we use just a set of words in the same sentence, the negative could cancel the positive, and I lose the sentiment of the whole headline news. In my approach, I keep the positive and negative, and I look at phrases, analyze at the phrase level. By doing this, I don't allow the negative and the positive to cancel each other. Okay, and which is very important. And that's why we see in the current literature, lots of neutral. We don't have positive, and mostly they just look at the negative and a small sample of the negative as well. Okay. And here we have negation with a verb positive. For example, if I ignore the negation and verb positive, I'm gonna just have a positive, which is opposite of what intended to transmit it through a specific clause or phrase. Okay. Now, for the same headline, let's continue with the assignment of the tone, which we call it the tone syntax pattern lexicon, which is step 6. We know this this phrase, one of the phrases that we analyzed, chevron beat earning, and it is finance. It is positive. Okay, so this is from our tone syntax pattern lexicon. We know this clause is positive, and we could, of course, we analyzed the rest of the sentences. Now, the component 7 is the most, this is the head, is the part that connects all of this component together and spits out the final sentiment at the firm level. Okay, so if so basically it is like algorithm. It's similar to the algorithm that Elon Musk developed for self-driving car. So now the algorithm just combine all of these components together to spit out the final sentiment. And I will show you how we do it. So each phrase analyzed separately and given a sentiment based on the pattern. Okay. So based on the pattern that we have, phrase 1 in neutral, phrase 2 is in neutral because I have just ExxonMobil, nothing else. And we analyze this sentence is positive, and we can do also this sentence, this phrase is negative. Now, there is a specific algorithm we follow that basically we could start from left to right, by assigning tone to basically we assume, and this is not our approach, is computer science is comfortable also proven to be the best approach. Assign this, the sentiment of a phrase will transmit the sentiment to the next phrase as well. Okay, so if we go from left to right, we cannot do this. And the positive and negative cannot affect each other, only transmit the positive and negative to neutral, not the other way. In other words, negative will not eliminate the positive. In other words, in here, if I go from left to right, neutral, neutral, positive, negative, nothing changed. What I want to achieve, I want to assign also tone for those neutral. Okay. Now, instead of going from left to right, I'm going from right to left. I start with the algorithm from left to right. If I cannot eliminate neutral, I start from the other side. Negative, it stays negative, will not affect the positive, stay positive. Now, because this is positive, it will be transmitted to a second phrase in the first iteration, and I assigned it positive. Now, after I assign positive, I go again from right to left. The neutral in the first sentence will be assigned also positive. In that sense, when I do it this way, I will assign chevron positive, Exxon positive, and the negative sentence at the end will not affect chevron. It will be negative in its own, but is not directly related to Chevron because it was with, despite it is separate from Chevron and Exxon. Okay, so again, so what we did, we looked at the pattern. We didn't allow the positive and negative to cancel each other, and we assign it at the firm level. If you look here, Chevron and Exxon, both of them, if for example, Exxon, Chevron was mentioned in another phrase here and it was negative, you're gonna see Chevron negative and Exxon negative and Chevron positive. And that's the power of our approach that allow us to assign it at the firm level. There isn't any approach so far in the literature that enable us to achieve this. Now, let me compare our approach just using words, the same two headline that we used before, and I showed you with Loughran and MacDonald and the GI index. Let's look how TESA, which is the name of our approach, the topic adaptive sentiment analysis, how it does in the analysis. Now, if I use the pattern, the topic adaptive sentiment lexicon, this is cell, verb positive, verb negative, the topic, business, finance, and the final label is positive and negative for positive for Boeing, and for that for Pepper Snapple is negative. Okay. Now, how our approach is doing, similar to the analysis I showed you for Bayesian, how we're doing. We need higher than 50%. 70 usually is great. And if you look here, in comparison to Loughran and MacDonald, our approach beat Loughran and MacDonald using the false positive, which is the verification approach in data science. Our approach is doing very well, and also compare it here with the precision and recall as well. Now, I want to show you how our sentiment analysis is related to market activities. Let me just introduce specific variables quickly. The most important one is the negative index and the positive index. It's basically negative index. We're looking at information within a day from open to close, the prices from, no, it's a close to close as well. And we looked at different windows. This is a close to close, 24-hour cycle of headline news in the market. And we know the prices of the market is we compare it from close to close, the day before and current day. And if you look at the negative index, is the number of negative news over total number of news within this 24 hours. Okay, we also allow for whether there are many news provider talking about if it is positive coming, like for example, if I have 3 negative news coming from Wall Street, or I have the 3 negative news coming from Wall Street to New York Times and for example, Bloomberg. Okay, so it has more impact. So we took in consideration also the news provider. Okay, so all of that definition, but in my analysis, I'm mostly focused on the negative and the positive index. If you're interested with the more like breakdown, the analysis, the results is stronger when we even look at more like effect of the news provider. So here I show you just simple analysis, which is event study, looking at on the news when it is released, how the market, the sentiment of the news, how it is related or associated with the market activities. Here we look at car using the 4-factor Fama-French model. And what we have here, we have finance negative, what we have here, finance positive, and in this side, business negative, business positive. Okay, and it's a dummy variable if it is positive and negative. This is not very thorough, just like event. Each news item is an event. It could have lots of problems. It's just like we want to navigate and understand what's going on, and then we go for more accurate test using regression analysis. And if you look here, day 0, where the news is released, every news article is considered as an event. It's giving us minus 3.32% response, which is daily based. This is abnormal return. And for the positive finance news, again, it is positive and 0.15%, which is economically significant for a daily base. And we get for business negative, significant, and it is minus 0.25. And for the business positive, it is positive and 0.06%. For example, this part in the literature results insignificant. You don't see this result. And this is the contribution also of our approach that actually gave understanding of positive news, not only the negative news. Now, if we look at, and I have many tables in the paper, just for the interest of the time, I'm showing you what we have in comparison to other approaches. If you look here, comparing our TASA using negative index, which is the negative news to total news in the market, with Lochran and MacDonald, bag of word. And this is a horse race in the same regression. You look at the coefficient. Our coefficient is almost double of Lochran and MacDonald, and the difference is statistically significant for the negative news. Let's look at the positive news. As I said, positive news is problematic in the current literature. They don't assign proper positive news. And if you can see here, Lochran and MacDonald approach giving us no significance, while our approach is showing us significance. Additionally, if you look at Tetlock, because this is behavioral finance, news, not necessarily fundamentally news, you should see some reversal. You see reversal with our approach, and you don't see reversal with Lochran and MacDonald approach. This is another verification. Reversal because we're looking at CAR in 2.25. This is abnormal return day after. And we did all the control, which is a lag of abnormal return, lag of sentiment and index for 5 days. And we have year fixed effect, industry or market capitalization. Okay, so in other words, all the analysis based on what we see in the literature. Conclusion, let me conclude. So what I showed you today is the development of, in the sentiment analysis in the literature, finance and computer science. We are lagging behind in the finance. We need to do a better job. My approach is towards that better job, I hope. I hope I convinced you enough. So I propose also a novel approach for sentiment analysis that take in consideration the topic and the semantic and syntactic structure of the sentences. We compare our approach with with existing approaches in the literature. We're still working on this. This is the first step. And what we found, some of the final analysis, that we find that counterintuitive finding of a neutral and negative market responses to positive sentiment is due to misclassification. So as I showed you with Lochran and MacDonald. And limitation of TASA. TASA, of course, it's big improvement, but we cannot be exactly like a human. Of course, we recognize it has limitation. Limitation of TASA is still limited. The pattern could not exist in our dictionary and we could miss it. But we're missing a pattern. We're not missing a whole set of words and relevant words. Okay. Future research could build on our algorithm and extend it. How we can extend it? We can extend it using the topic adaptive lexicon. The algorithm can be trained using machine learning, and this is what we are working on now. Instead of assigning the final tone with a core, link it with machine learning approaches, and that's what we will do as well. And one of the important things is to know TASA is adaptable to address new investigations. Topic lexicon can be modified from business and finance to include other categories, as I mentioned to you, merger and acquisition, learning announcements, so it can be used for other setups. Topic adaptive sentiment can be expanded to include new words. When we conducted our research, we didn't have the pandemic, we don't have COVID. All of that can be added and train our algorithm on those new headlines that talks about the pandemic. The approach is really relevant for analyzing text. As I mentioned before, Lochran and MacDonald do not use it to analyze media news, is incorrect. I used it myself and I was burned and right away backed off and I stopped using it. So this will be, our approach will be more appropriate to analyze media and small text. Okay, and that's basically conclude my presentation. And thank you very much. I'm going to stop sharing. I think now for the question part. How are we going to proceed, Michelle?
Yes, we still have some time for questions. We do have one here. The question is, do you think if there can be a measure of intensity of sentiment which can be recognized by the machine? As in, when we talk about negative news, the intensity of that negative news on the stock price can be low or high. So right now, you've done, you know, Tassa does a great job. I think what this person is asking, you've done a great job of, you know, saying this is negative, positive, it does not cancel out. What about the intensity of that negative or positive?
Yeah, intensity is very important measure, and actually we control, we have variables to capture the intensity. Basically, you want to say whether the news is coming from one news provider or it's the news provider releasing. By the way, we don't have duplicate. We also control for duplicates from the same news duplicate of a news, republish the same news article, but intensity in terms of how many news provider are publishing same tone, or they are basically creating conflicting in news as well, right? So we have measure for that, definitely, yes. You can control for that easily, yeah.
Other questions at all?
It's late afternoon for everybody.
Yes, absolutely. Okay, if anybody has any further questions, I'm not sure if Nadia, you have some time. I can direct everybody to the reception, and you can chat a little bit further about that then.
Yeah, just maybe a final question, Nadia. Can the method be extrapolated to a fuller text rather than just news? Can it be used to...
For full text, yeah.
Yes, maybe
yes,
to analyze
definitely.
reports or filings of firms and compare across firms, rather than just headlines.
Yeah, it is like like this approach. What we developed is for headline news. This approach can be used for analyzing full text, but we need to keep in mind it's the you need to have a fast computer, and now it is not a problem. It can be done. It can be extended for larger text as well. For media news, our understanding, analyzing the headline plus the abstract at the beginning is more than enough to give you basically the crux of, like, read any article, like just if you feel that the article does not reflect the sentiment, it's very rarely to actually get a different sentiment after reading the article. Yeah. So yeah, it can be extended. Here we're starting a new way of analyzing sentiment and finance. We chose it to show it as demonstration, how you can improve that. And of course can be extended. And that will be the next step.
Yeah.
One other question popped up, and this is just, how would you separate fake news from the original news source or the less biased news source, I suppose, although sentiment, of course, is biased.
Yeah, this is another area I'm interested in, is how to analyze fake news. How would you separate them? Our approach, unfortunately, now does not. But as long as you have enough relevant news in the market, the fake news will not dominate, because the firm, if there is fake news and is against the firm will come up and with the help of media to defeat basically that news. So you will have different news coming and will contradicting each other. Yes, but we're not controlling for that. I just wrote a proposal about identifying fake news using machine learning approaches, and this is another area where people need to pay attention to. Yeah.
Oh,
so
absolutely.
Now it's interesting. It's an interesting area as well. How would you separate? Yeah.
Mm-hmm. Incredibly relevant in this day and age.
Exactly. Very important area. Very important area. Yeah.
Let's see, there's something else that just popped up. Could you justify the similarity between news?
Oh, justify similarity between news. Well, it could be news, similar, like, if there is a specific things happening in our ecosystem, specific, for example, oil prices increase, you're going to see similar article talking about similar things because there is a specific event in the market that will affect them. Yeah, so here I see the question going to the news. For us, ourselves, we're just taking the news as it is. Imagine you have algorithm trading, and your algorithm analyzing those news, and the way we're looking at it, reading those news. If you have similar one, will give you actually stronger sentiment as well. You can make it as a stronger. People are agreeing on the impact of specific things, which is basically it's a network, basically network among the media that they agree on similar things, which is the wisdom of the crowd, maybe. This is the outcome of it can be related to the wisdom of the crowd, but this is not what we're doing. We are just looking at the media news. People could combine it with other approaches or theory in their analysis. We're giving the basic output, and it's up to you how you're going to use it afterwards.
Okay. All right, I think I might be serious this time when I say that we will likely end this session now.
Thank you very much. Thank you, Elena. Thank you, Satiris and Michelle. Thank you for the invitation and for giving me opportunity to talk about my research. Yeah, thank you.
Thank you so much. It's a fantastic approach, and again, very, very relevant for the times. All right, if anybody would like to join us, I believe that Karen has opened the reception. I will go ahead and include that in the chat here. If you are in Europe, have a very nice night. And if you are in the Asia Pacific, we will pick up our sessions in a few hours for anybody in that region of the world or anybody else who might be awake at that time. Thank you so much.
Thank you. I'm trying to connect through it.
Is it not working?
My camera is off. I don't know. Oh, because I'm in this session, of course.
Oh, yeah, that's true. You know what? Because I'm like, I forgot. The reason I'm in it is because I'm on a different laptop because I have two laptops going.
Of course, because I'm
you when I need to leave.
At least I'm thinking, yeah, it doesn't work well because I'm on the camera. Okay, so
Okay, I'll click end.
see you. Yeah, so I'll see you in the session.
See you there.
So what do you, yeah, all right. So all good, all good.
You know, how do you feel about Dubai?
About Dubai?
Mm-hmm.
In what way?
We're going to be doing a conference there in late 2022.
Oh, this is for me perfect. I have
I knew you would say that, Nadia. This is for me. Perfect. We have to talk.
Many cousins there, and then I go to Jordan after that, see my family. So it's perfect.
We have to talk.
Yeah. Okay.
It would be wonderful.
All right. Wonderful. Thank you. Thank you.
Okay. Now I will click end so we can actually go where we're supposed to be.
All right. Perfect. Okay. Thank you. Thank you, Karen. Thank you.
Goodbye, dear Satiras.
Bye-bye, Satiras. Bye.